All right, so here we are. Big down day, but I guess could have been worse, or it could have been better. It depends on what side of the trade you're on. All I know is I came in this morning and I mapped out areas where I would have liked to have seen some of the names that I like and that I want to trade get to. Sometimes they get there fast, sometimes they get there slow, sometimes it doesn't happen in a way that I like to interact with the names. Sometimes it does. Typically, I like when things kind of have like a swoosh into the first half hour of the day into key areas versus 2:30 in the afternoon or 3:15, which is where this rally started. It seems like the computers have done a pretty damn good job trying to trap as many people as possible in any which way they can. Same way a week and a half ago, we were all pretty bearish. I'm like, what the hell's going on here? You got the fiscal cliff, you got taxes going up, you have the China, tech crackdown, you have Evergrande, you have tapering, you have the AD lines, you have all this stuff happening. And then for a week, it took so much time before finally you had a break on Friday, which was good because it got a lot of people out of a lot of risk and some people more short, whereas it all depended on your risk. So then coming in today, most probably had a few left over of the little short squeezy type names like I did, and you had some decent hedges on, and maybe even a big call spread. So okay, I'm like, all right, where's a conducive area, where's a compelling area, and where's where's no man's land, So P.S. Take a look at the spies, and my what's it called? I covered all my spies pretty much into this 433 area prior to the open. So this way I was able to maybe buy the 431 area. So before leaving, just to give you a quick story, I put in some bids to buy a little bit above 431 and then all the way down to 428, just in case it wanted to break below, stop the longs out looking to buy at the 5% or looking to buy at the 100-day, because usually first time you get there, it either stops above it so it doesn't get there for those waiting for it, or gets there, it doesn't make it that easy, flushes you through it and then comes back above it. So P.S. Spies, if you look at this move, happened at 320, right? I know right around here is when I tried it, and then I was like, it's not going to work. Who knows what's going to happen? Maybe we could be down 1,500 points, and then all of a sudden, this happens at 320. The only thing you could have done, I guess, is at least when it took out this range, maybe maybe what did I just do here? I don't know what I just did here. Anyway, so when it took out that range, what's it called? You didn't get, you didn't fight it. I actually waited a little bit and then I took the other side of the street. But anyway, if someone would have stole me, I would have probably been in tier 2, long the spies, and would have caught a really nice bounce. But it didn't happen the way that I like it to happen. So that's something I think everybody's got to learn from, is that not everything's going to happen the way you like it to happen. You could do things in a way where, let's see, intraday, there it is. You could do things, that play to your strengths, and you could work on things that play, that play to your weaknesses or whatever, or work on that hurt you. But anyway, I waited till about this 432.50 area. I'm like, what, I shouldn't get through there just for a trade, and wound up going to 435 or wherever it went. So I just got out of some of it now. But anyway, what I was trying to do with this line here is, we talk about an igniting bar, and right here, it kind of had an igniting bar, and what's it called? So at least maybe you waited to 432 from 429, 3 points. This is actually where I started to fade the move a little bit, and I cost averaged up and I got out of it. I'm not shorted overnight, but anyway, hard to see this coming. The only thing you could have seen or could have trusted, which it's hard to trust, in the market, is that here you are 5% off highs and, a spot that, perhaps they're going to play with. So anyway, they played with it, they closed above it. Now the question, that's done. So now whatever you have overnight, you have overnight, long or short, positions or no positions. And now what you'd have to do is looking forward, whether it's tomorrow, which is probably not going to be as crazy as a day as Wednesday, because Wednesday is Fed day. So like we said, 5% off highs, Fed's probably going to be more dovish and hawkish. At the highs, maybe more hawkish than dovish. Anyway, so question is, will it fill this gap, 436 to 441 or not? Do we have a few inside days? You can move this up now because this is the gap. You know, few inside days with no real rally, maybe it rolls down. Maybe you get 7% off highs, maybe you get 10%. Most people today did not talk about how 5% is going to be it. You know, it's going to be at least 7, it's going to be 10, it's going to be 15, it's going to be 20, and I guess that's why we rallied into the end of the day, because too many people thought that it can't happen yet. So for now, we'll see how it goes. Do we fill this gap? Does it stay in here? And we'll try and trade accordingly. The Qs, you know, also very similar, not as weak, didn't get down quite towards the 100-day. So this is like no man's land. It's below the 50-day, above the 100-day. Who would have thunk that that would be the spot that maybe is the low or not? So anyway, now you could kind of raise this a little bit. We now know where this gap is, where it starts. It starts at 369.25. So does it fill that gap for a trade for cash flow? Because that's all I'm trying to do now is stay safe and make some cash flow. Because I'm not sitting in a portfolio approach waiting for, you know, things to kind of trade through higher highs and higher lows. And now we have to trade the market, where at this point this upper wedge could work to the downside. Now the question is, do we go sideways and continue lower? Or is there a trade into here? And it's really just the trade's going to be based around the open. You know, the future's up or down. Are we shorting a rally into resistance, or are we buying versus support? What's showing relative strength in the day? What's not? That's how I'm just going to judge every day until finally we get to a spot that feels like, you know, we could, you know what the composure and complexion is. Because again, you know, in here we were neutral, neutral to negative, neutral to positive, depending on the day, and then, you know, finally neutral to negative on Friday, which gave you follow through. So that's good. So was that enough? You know, only time will tell. So everybody's gonna have their opinions. I'm gonna try not to have mine. So I've had a few opinions that have been right, but by the time the market has, you know, proved it right, it's, you know, taking a little bit more time. So I have to learn, you know, how to adjust around that. You know, if you really look here, besides this little poke up, it never really gave you pain if you were short a lot of Qs or SPYs, especially the SPYs. The SPYs never even, you know, cleared this spot. So if you were short versus, you know, this area, the 18-21, even though it gapped up every day, that we were really short a lot. Like on this day, that happened. But anyway, got to give things a little bit more room. Even today, you know, on the long side, maybe people like buying at 3:20 in the afternoon for a 40-minute rip, which if I'm on the right side of it, I love that too. But anyway, I wasn't really on that, so we shall see. IWM, you know, still in this channel, and, you know, it's all flows, but it didn't hit the 200-day. It's below the 821 all that. It's got a gap to fill. Okay, maybe it doesn't. OHs, we got stopped out on Friday. Today, you know, I guess you could say this is still kind of included in that. I don't know how you make this little thing. I guess you can go like that. You know, some of you who you know, you probably would have given to 178 unless you're giving it to 164. And now what? I got stopped at 188. I'm not looking to get back in here anytime soon. I'll tell you, today they got me good. They got me pretty frustrated today. Anyway, we'll brush it off. We'll brush it off. Like Apple. You know, I wanted to buy it into the 141 area, but it was heavy all day, and then finally, you know, gave you the move at the end of the day that, you know, which is what people probably wanted if it happened in the beginning of the morning. But again, it is what it is. Now you have 141.28. Let's see, I lost that chart. Here it is. This is how this went. This, I think, started a little earlier than the SPYs rally. Actually, no, it didn't. It started at 320. Same exact way. You know what you could have seen? What could you like to see? What could you have seen? Like for Apple, the low here was literally before 3 o'clock, and the SPYs went to at 318. See, this is a little active trading 101. So the Apple put its low in here, which was before 3 o'clock, and then held higher, and then the SPYs made new lows, a 315 and a 318. So right there, that gave you a little bit of a signal that if you're looking at Apple very close, that maybe there's some kind of trade that could happen, and it did. So right there, that's just like a little day trading lesson. And then it never really looked back. Facebook kind of did that also. Some guys were talking about Facebook. Facebook put its low in right here at 346. Okay, no, sorry, 246 or 256. I'm sorry, just to give you like a little, day trading lesson. So if this low here is at 256, the SPY's low comes in at after 15 minutes later, and Facebook, which was so weak all day, doesn't make a new low and holds $2 above. That's giving you a signal that, hey, maybe there could be a move coming, and there was a move coming. If you go to Facebook now, Facebook also kind of held where I drew the line this morning. Anyway, I don't know why TrendSpider is not working with the lines that we've had in there, but anyway, they actually didn't really get to the 100-day, but anyway, it's been pretty much broken through since breaking that 373, and probably as soon as I'm done with this, it'll pop up. But that was Facebook. So now what? Guess we'll see if today's low holds moving forward. Well, it'd be a good setup if it opens up down a few bucks tomorrow, and you could buy it versus 349.94. Right? 349. So that's that. Amazon. It's amazing how this also. So now this is your new point of reference, right? 3305. Not much to do except for what happens here. Does it stick below? Does it keep this gap unfilled, or does it push into it? Every trade is going to be based on where the futures are and what's happening pre-market moving forward until we get a new trend. To prove that 5% off the highs was enough. Netflix traded through 575, went to 568, big wide range barn. Not much to do here either, except for now you have a new point of reference. And in the beginning of the day, everyone's like, "Oh, look at Netflix, it's only down 2." I'm like, just be careful, because if the market deteriorates, it could be down a lot more than that. Anyway, what now? I guess we'll figure it out. Or not, or just avoid until it rebuilds. Here it looked great, big move, bull flag, above the moving averages, had a downtrend line to break through, and gave us a trade. Now, it's trying to hold up a little bit, but to me it's not compelling, at least something not to sit in for now. UPST held where it had to again, right? It's not quite at the 8-day, so maybe you're in it, you're not in it. I don't know, I'm not in it. Gave a few trades today, but definitely after a move like you've seen, since it's pro gap, hard to just sink your teeth into there. I'm waiting. MDB also, came a little bit below the 8-day, and then came back above it. So is that going to be the bottom? I don't know. All is now you have 483. Do they, really protect these things so when the market decides to rally again, which the market will decide to rally again at some point, then these will be the leaders of the next move. But for now, it's got to prove it could hold, this area. Otherwise, it could go lower. So you got to figure out what you want to do. This is 483. This doesn't matter anymore. So now you can actually make this a little bit different. Just go sideways. Let's see if there's a new level build here. Does it hold above here? Go sideways, and then when the market wants leaders, will it be a leader? We'll see. GLBE, very similar. Got below 70, came back above. Now it's just still needs its time. We get rid of this line and get rid of this because it doesn't really mean much anymore. So except for now, we have a new level to trade against, whatever this is. This is 68.25. All right, go sideways for a little bit. maybe creates another pattern to trade from, right? And then goes inside a few days, and then there's more clarity. Until then, not really interested. In Semiland, NVIDIA, Doji held the 50-day, or went below it, came back above it. So I guess you want to start saying, okay, so if the SPYs went to the 100-day and NVIDIA only went to the 50-day, what's strong or stronger? NVIDIA is still stronger than the S&P. If the Qs went to below the 50-day and kind of still below it, NVIDIA is, above it. So NVIDIA is still showing relative strength to Qs and the SPYs, but is AMD doing that? Not really. AMD broke below the 50 days, trying to just come back to it. Hit this prior breakout area of, was that 99? Now what? I don't know. You see, move this up a little bit to new point of reference. Now we'll see, does it stay below this 102.40, or does it try and fill the gap for a trade? We'll see. We'll see what tomorrow's futures bring. Are they up or are they down? So again, this is, what does today mean? Today doesn't mean a whole lot of anything, except for it would have been nicer if we closed in the lows and we gap down tomorrow to be more oversold, to have less risk, to catch a good move. Now, we kind of caught people a little off guard, where now it's like, okay, could they squeeze us up a little bit more and still be in a downtrend and go make new lows in the days ahead? Yes. Or if they open us down, there's a lot of room now from 428 or 429 to, where we are up here. So the setup isn't as good. The fat pitch, guys, we're talking about the fat pitch. Oh, what a fat pitch. It was a fat pitch in the first half hour that turned into a curveball because it was weak all day. That turned into, a change up into the close. So now tomorrow, I don't know what kind of fat pitch that could be. If we opened up close to here and you could trade verse there and then a reverse in the first 30 minutes, that's a fat pitch. If it opens up a lot, I guess, and then if you want to short versus that gap, or you think it's going to get in that gap, it's a different pitch. This is resistance now. So one pitch would be, hey, short into there if it's up there, or see how much, so maybe it pushes into the gap and doesn't hold. Another pitch would be opening down here to see if it can go up. The VIX, I did kind of do as planned. I wound up selling 30% of my VIX call spread. So we'll see. Is 32.40 now the high of what this VIX move will be? It's to guess. Same way the SPYs kind of reclaimed and held the 100-day. Now the VIX at the first kiss is saw resistance there. So we'll see. We shall see. The VIX, watch what it did. Just out of nowhere, looking so strong. Everyone's talking about the VIX at 320, then boom, dropped. I don't even know what percentage that is. So what could you look for in the VIX tomorrow? Similar as a stock, I guess. You like this? Is VIX going to hold this gap or not? Is it going to open up and could you short it versus there? Maybe. These are just all things I'm going to be thinking about tomorrow, depending on how we open and how we go. Right. So I still have 70% of the call spread on. We'll see. So it's 433. All those I'm not going to get into the short squeeze candidates that wound up hurting. Some guys held them longer than I did, and salvaged them better. Some guys didn't. In a tape like this, just to me, I was like, all right, I don't feel like dealing with those things. Should have not dealt with them on Friday, I guess. But I apologize. SDC wound up, at least we sold that into strength. And now there was some news after the close. I don't know what it's going to do. What was the other one? XOS. Yeah, held the lower end of the range. What was the other one? DOMA. In the range. So for me, I'm going to focus on trying to find where we get an active sequence pivot, where we get either a bottom, a double bottom, when do FANG names or key banks or key stocks hold, and when can we start putting them on, and when do they prove that they're going to be special, and when can we start a new active sequence. Maybe there'll be some volume type trades here and there for cash flow, but that's not going to be where I'm looking to, sink my teeth into things, especially until the market, gets a little bit, less volatile, et cetera, et cetera. Hasn't been the easiest environment, but there are definitely things to do, and I do apologize that as the process and system has let me, keep from having a big gusher. I feel like we've seen some things and could have definitely reacted better. Like I think I should have been more short coming into today, and if I would have just put my orders into where I wanted to buy some things at first kiss or first glance, or and kept it the the computer off, because that's why I have an active account, a swing account, I would have picked up a lot of good trades in the hole, whether it was Apple, SPYs, even Facebook, and then that would have been a nice scoop. But it happened at 3:15, where for me that's not the most opportune time to play that type of situation. And as far as being short over the weekend, I probably should have been more short. I was really, really, really short the week before coming into Monday, and I guess because of what happened on that Monday where we gapped up and it was a hard, I didn't do it this time. I just did it a little bit, which helped me, so I wasn't down a lot, but I could have been up a lot playing for that kind of break. So again, I'm going to write all this stuff down on my hand, or I'm going to say it to you guys, so this way if you had the same kind of things happening, we all just catch the moves a little bit better or easier when they happen, and if they happen. And we'll see how it goes. It's still September 20th, and Fed is on Wednesday, and got a lot going on between now and the next week or so, so there will be a lot of things to do, a lot of moves to catch, a lot of ways to work on our process, but you're not going to be able to do it if you don't think clearly enough, and especially don't revenge things. Don't revenge. Revenge trading is what puts traders out of business. Just blow off the steam and approach the next day as a new day and a new setup potentially. And if it's not a great setup, do less. If it's a good setup and it plays to your strengths, then maybe you swing the bat a little harder. And that's it. Have a good night, guys.